So we have a stock market sell-off in a big way. Wow, what a day. So just coming on here, it's 2 o'clock. There's currently 2 hours to the close. So while I'm making this video, anything can happen between now and 4 o'clock. Keep that in mind. But right now, what we have witnessed has been an epic sell-off. You're going to hear a lot of reasons for why the market is selling off. I would not believe any of them. This is strictly a technical sell-off, and that's it. I'm going to show you guys on the charts right now. This is all about market sentiment. This is just, this isn't because of Micron's earnings yesterday. A GDP number that was revised up. Okay, that's not great, but we already know that the Fed is going to keep rates higher longer. They told us this. We don't need economic data to tell us what they're already going to do. So, this is just positioning ahead of next year, and, it's been a wild day, to say the least. And I have benefited big time from this day because I started to short ExxonMobil yesterday, and I think I went over that this morning in our live video, but at resistance, I started putting on puts on that. So that is currently running really nice in the green. But let's just, for argument's sake, let's just look at what came out this morning that caused the initial algo drop in the market. So at 8:30, that's where we had jobless claims. Now, this has moved markets in previous weeks. These things usually, in a normal year, do not move markets like they have this year. So you had jobless claims. I mean, guys, this is 216, expected was 220. That is not a huge difference there, all right? Really not a big difference. So that's less people filing for unemployment than expected, 4,000. All right, not a huge deal. The market went down. GDP was revised up. That has continued to be revised up, suggesting that the economy is strong. This is a backwards looking number. This is not where we're currently sitting or where we will be sitting as far as GDP goes. So this is old data. Yes, it was stronger than expected, but the Fed already knows that the economy is strong. The market sold off still. All right, that's what we're seeing right now. Now, tomorrow is the PCE. That is an inflation data gauge. It's something that the Fed really likes to look at. So this, to me, is way more important than what we saw today. And what we saw today, we've seen a sell-off like an FOMC Fed type of Powell hawkish sell-off, terrible CPI number sell-off, not a jobless claims or a Micron bad earnings sell-off. That's ridiculous. So let me show you guys the technicals and why I'm saying this. If we look at the SPY, I'm going to look at the SPY on the daily chart. This is something we look at all the time. I'm going to put on our indicators here, and I'm going to show you guys what we rejected off of. Now, we had a nice rally since October, very clean. Well, not very clean, but it was still a rally nonetheless. Into resistance. Everyone knows what happens here. CPI, and we sold off. Now, this CPI, and this is why these numbers are so ridiculous. This day right here, this big day that we broke out, but only to sell off all day, this was because of a very good CPI number, lower than expected, and the market sold off. This is what I'm trying to say. Do not listen to anyone telling you why something is happening in the market today, because you saw great numbers on the CPI and the market sold off since. All right. So a jobless claim number, a GDP number, or Micron's earnings have nothing to do with the fact that we are down here today, in my opinion. This is all sentiment driven, all right? Great number on CPI. It doesn't matter because we were coming into resistance, a trend line that we didn't close over all year long. That is why. Great numbers. It doesn't matter. This was too much. This was into resistance. This was into supply. Nobody wants the market up here. That's way too rich, valued for stocks to be selling up here at 410 on SPY. We sold off to 380s and we saw a little relief bounce. That's totally normal. You're gonna see relief bounces. The market doesn't just go from 410 to 380, or 370s without having a little bit of a bounce. That's just normal. So now, why did we reject here? This is the 50-day moving average. This is something that's very important on the daily chart. If we look at this on a 5-minute chart, you can see here yesterday it couldn't get over this moving average. Very clear resistance. This is not at a key level. This is at the 50-day moving average. As simple as that. This is not at any key level. So obviously this morning coming into the market is where we saw the continued sell-off from this. Couldn't get over it. Just could not close over this level and saw further weakness today. And we just continued to break down, in a huge way, in a very big way today. So that is the reason why we are down. We were coming down, looking at this on the 1-hour chart. We'll go a little bit out. Look at a 30-minute. So we were coming down from this level here, all right? This 430 to 410, right? All the way back from the summer. We were on a downtrend. We had a nice bounce in October to these trend lines here. And then this is just continuation of that downtrend for the year. We had the downtrend, like I said, had a little bit of a bounce, got rejected at the 50. That is suggesting that the market overall is very weak at the moment. Now, something that I showed, which is really interesting here, is this section of trading, right? You see this 20 EMA and the 50-day moving average? When it crossed over, we saw a nice rally. Right here, same thing. When we crossed over, we saw a nice rally. Now what is happening is that 20 EMA is starting to approach the 50. The 20 EMA is starting to approach the 50. Very similar trading styles pattern right here, from the summer rally to the October rally. Very similar the way that these have worked out. So the 20 is coming down to the 50, and if that happens, then we can see a lot more downside. And that's what we're seeing right now. This is not because Micron's earnings were not good. Micron said their earnings were going to be bad all year long. So, just watch what you listen to and do your own due diligence. Just because I'm telling you this, doesn't mean anything. Do it yourself also. If what I'm saying makes sense to you, then it makes sense. This is technical analysis, and market sentiment is so important. Market structure is so important. So anyway, it gets me so steamed up when I hear on the TV why something is happening, why it's happening after the fact all the time. It's like they have to come up with a reason, not just because this is what has been going on all year long. It's actually pretty funny. All right, so hit the thumbs up for the video, and I'll see you back on the next one. Take care, guys.